The most common question I'm being asked at the moment is, will property prices fall? I'm being asked at meetings, I'm being asked over the phone, and I'm being asked over on Instagram. But before I get into all of that, I want to say a special thanks to my 1,000 subscribers. Thank you very much for subscribing. It makes it all worthwhile doing these videos. Also, if you haven't started to subscribe, make sure you click that button and subscribe to the channel. Everyone will have their own view and opinion on the property market. And perhaps you might be asking yourself, why even listen to this guy? Perhaps you shouldn't. I'm just providing what my view is on the property market, and perhaps just give you some background. My name is Fleming. I'm a chartered property surveyor here in Dublin, Ireland. I run my own consultancy based here in Dublin. I have clients from McDonald, Circle K, private investors, developers, residential buyers and sellers. I've worked for banks, international companies, and one of the biggest estate agents in the world. I also have a degree in property economics, and I've been through a bad recession as well. But none of this actually means I can tell the future. But it does give me a wealth of experience to draw on informing my views. I think it's important to frame my viewpoint from a commercial point of view and from a residential point of view, because I think one does impact the other. So going back to my college days, I remember that property prices go up or down depending on some macroeconomic factors. Those factors include GDP, employment rate, inflation, interest rates, foreign direct investment and trade. As Ireland is such an open economy as well, you also have to think about the international factors that could impact Ireland and Ireland's property prices as well. Supply and demand will have an impact on property prices, but generally speaking, they're influenced by the macro factors. So the macro factors. First off, interest rates. Interest rates for the state are very low at the moment, and the state can borrow at record low levels. This is great news for the economy, and it's great news for Ireland as a whole, because we can borrow vast sums of money to invest in the economy, and hopefully the state will invest wisely. There is a hope that interest rates for residential mortgages will remain stable, and perhaps with new players to the market they might actually come down a little. However, interest rates on commercial lending for property is going up. I have clients reporting back to me that they are being offered a full 1% increase or 2% increase in the loans that they've been offered. Also that they've been requested that they have loan to value ratios of nearly 60% and in some cases 50%. This increase in borrowing costs and difficulty to finance property, commercial property, is going to lead to a knock-on effect on decreasing property prices. So on to GDP. I would have actually expected GDP to be way down on last year, given the fact that the whole economy was closed for a number of months. I was expecting that GDP at this stage would be down by 9 or 10%. However, that hasn't actually happened. It seems that tax take for the government is actually only down about 2.5%. So that would mean GDP hasn't fallen too far yet. And I think the main factor is that there's been a surprising increase in some tech sectors, as well as some retail elements have also done exceptionally well too, from supermarkets and from homewares. Another main reason why GDP hasn't fallen too far is actually government spending. This stage last year, in July or August of last year, government had a surplus of 625 million. Right now, the government have a deficit 8 months into the year of 9.5 billion. That spending has gone into healthcare, hospitals, private hospitals, also renting of hotel space for extra beds, PPP, as well as huge, massive wage subsidies that have gone across to every sector of the economy. It would be expected that a large amount of the government spending will actually be recovered in tax as well, from income tax and everything else. But once the level of state aid support drops off, GDP will also drop off as well. Inflation. Inflation is actually one of the ones that most people didn't have to worry about over the last decade or two. And that's because the European Central Bank's main goal was to keep inflation low. I generally don't think that most people will be considering inflation when they're buying property right now. There may be some large pension funds or large unit trusts that are thinking about protecting themselves against inflation, and they may look to invest in property. But generally speaking, I don't think inflation is one that's going to really enter into the minds of most people's investments or buying decisions right now. Even though right now the government are providing huge amounts of wage subsidies, our unemployment rate is at 16.7%. That's up from 5.2% last year. Regardless of what sector the unemployment is coming from, this will definitely have a negative impact on sentiment and also will have a negative impact on property prices going forward. It's my guess that more job losses are likely. Also, banks will become far more stricter in their lending practices as well. From an international point of view, when you consider foreign direct investment and also trade, Ireland is such an open economy that we're definitely not going to be immune to a global slowdown. The IMF have reported in June that they're expecting a global slowdown of 4.9%. That's effectively they're saying that the economic growth rate will be minus 4.9%. That's actually higher than their actual prediction in April of this year. They're expecting even higher decrease in growth rate for Europe. They're expecting a growth rate of negative 10.2% for the European zone. Ireland is not immune to this. Ireland will definitely be impacted by a negative global growth rate. When you consider how open Ireland is as an economy, you also have to think about the US and foreign direct investment from the US. You also have to think about trade from the UK. Anyone who is considering property prices here in Ireland must consider the outcome of a US election and also must consider Brexit coming at the end of the year. I said it before that Trump would do everything in his power to win this upcoming election. I thought that he would try deal with the coronavirus as much as he possibly could and would throw as much money at it as well. I was right, he did throw huge amounts of money at it, however he didn't throw it in the right direction. The SP 500 is at a record high, but when you actually strip out the top 5 or 6 performing companies, which would be the likes of Apple, Microsoft, Netflix, Amazon and Google, when you actually strip them out, the actual performance of the SP 500 are actually quite poor at the moment. It's 4% less than it started at the start of the year and also way below its current trading point. Therefore, looking at the SP 500 to judge the performance of the overall US economy is not a great benchmark anymore when 25% of the overall holdings is based on 5 companies. It was reported this morning on CNN that up to 40 million US citizens are facing eviction. When you add that into a possible trade war with China and everything that's coming out of the current election, the prospects and the outlook for US right now is not that positive, and that will have a negative impact on property prices here in Ireland. Due to Golfgate in Ireland, we actually lost one of our lead negotiators for the Brexit, and a no-deal Brexit is looking more and more likely. While a no-deal Brexit actually probably wouldn't have the same impacts now as it previously would have, because effectively a lot of our borders are closed at the moment anyway, I do think it is still worth considering the impacts of Brexit on the Irish property market, and it's something that we shouldn't forget about. In past videos at the start of the lockdown, I put out predictions that I felt that property prices could fall from 10 to 20% or even more depending on the actual sector. I also stated that there was a lag effect in falling prices, and price falls were generally seen about 6 to 9 months after there was a fall in GDP. The lag effect is well documented. It's something I studied in college nearly 20 years ago, and at that stage there was about 80 years of research on it. It's also something I witnessed in the last recession as well. On average, it takes between 6 to 9 months for property prices to show a fall after an economic factors have changed. But one of the earlier indicators are changes in price of unit-based property trusts, such as REITs and unit-based property funds. What we saw in the last few months in regards to these property-based funds and trusts was that there was anywhere between 10 to 20 and some cases even 30% fall in share values. These property-based index funds generally fall far quicker than the actual market, but they do give a clear indication of where majority of investors think the market will end up. Given the fact that the market and the property market was shut down for effectively a few months, the lag effect might actually be a little bit longer this time, and it might take more than 9 months for it to really show up. Large price falls are already evident within the commercial market. Some investment properties have already shown signs of fall in prices, and there will be further adjustments over the next 6 months. I have seen bids come in on investment properties sometimes as much as 10% or 20% lower than the asking price. Those bids have been rejected by the vendors, but I definitely see that there will have to be movement within the commercial investment and commercial property market over the next few months. All of this should be fairly clear. Office tenants can't use the space as they once intended it. They're not committing to long leases right now. Also, pubs and restaurants and hotels are suffering greatly. Retailers are suffering as well. Some retailers have gone out of business permanently. All of these things, including mounting arrears, will have a negative impact on the overall investment price of a property. Some sectors have performed well. I did mention it before that industrial could perform well with the growth of online retailing, but surprisingly enough, one thing that I didn't think about was that supermarkets and some homeware stores have actually performed quite well over the last recent months too. Overall, the commercial market is very standoffish at the moment. Some deals are falling through because of finance issues, and also it's getting harder and harder to source finance too. I will come back around to development sites at the end of this after I've gone through residential in a bit more detail. So in past videos, I have discussed the importance of understanding the difference between asking price and sale price, especially when they're being reported in the papers, and be very mindful of what the actual headlines are referring to. An article in the Irish Times on the 28th of August 2020 read, "House prices rise by 4.3% amid the lifting of the COVID-19 restrictions," report says. So this report was actually based on My Home and a Davy survey between June and August based on asking prices. In summary, prices fell by 5% at the start of the lockdown. They increased again slightly when we came out of lockdown, and they increased again by 4.3% between June and August. This effectively brought us back to where we would have been in terms of asking prices at the start of January, start of February. So effectively wiping out any loss and also wiping out any gain, and coming back to a neutral point just in terms of asking prices right before lockdown. But again, I think it's important to emphasize the fact that these figures are based on asking prices, and also the fact that there's 20 or 30% less houses actually on the market to calculate that asking price as well. A lot of agents, particularly in Dublin, have stated that now is a good time to sell because there is pent-up demand and some properties are receiving multiple offers. I would agree with them. I think now is a good time to sell, and if you are thinking about selling, please feel free to reach out for a chat. I'll leave my contact details below. This should actually be crazy for me to actually say this, and it should be also mad for me to use these figures as well. But Crazy House Prices on Instagram have been recording sales drops on properties for the last number of months. They've recorded, or they've published, at least 300 sales drops across Ireland, majority of which are in Dublin. Those sales drops range from anywhere from 3% up to 35%, ranging from anywhere from 10 grand up to 1.5 million. Most of the price drops are in between kind of 10 and 12%. Also, Crazy House Prices only highlight a handful of properties that they find interesting on their actual Instagram. From talking to them directly, they have said that they come across maybe 10 to 60 price drops every day for the last few weeks. I will leave a link for Crazy House Prices below. I do also think it's a bit crazy that I'm getting this data from an Instagram account and someone like Irish Times is not actually publishing this data. While the Irish Times headline for the article was "House prices rise by 4.3%, the actual body of the article was quite negative in terms of the overall outlook. It suggested that mortgage approval rates were up by 50% on July to June of this year. However, that was a 33% decrease from last July as well. Also, commercial investment loans for buy-to-let properties was down 50%. It's not a big deal because that doesn't make up a huge volume of the actual overall market. But overall, I see that banks are going to get stricter and stricter on their lending, and they're probably going to be very slow to allow any exemptions as well. I think once the current pent up demand is kind of satisfied within the current market over the next few months, we will see prices fall. How much they fall will depend on a number of factors. At the start of all this, in the start of lockdown, I did suggest that property prices would fall from anywhere between 10 to 20% and even more in some sectors. I still think prices are likely to fall. I think the lag effect is going to happen in the next kind of 2 to 3 months, but it will take a year or two to see the full correction of property prices. A lot of people, particularly over in Instagram, have asked me the question in regards to new homes and will prices remain high due to the lack of supply. Well, I certainly think the lack of supply will help prices remain high for a period. Also, the increasing of the first time buyers grant will definitely have an impact on prices remaining slightly stable for a considerable period. But ultimately, all the other economic factors that I've highlighted below will have an impact on new homes and new homes prices, and they will come down. If second-hand homes become more affordable and first-time buyers see value in second-hand homes over the first-time buyers grant, that will definitely have to shift the price of new homes. However, the whole issue of lack of supply, I think development land will become cheaper. Also, some commercial schemes may not become viable anymore, and developers may shift their focus. Developers may shift their focus away from office and may shift their focus away from hotels and revert back to residential schemes. A lot of those schemes may be developed as build to rent, as there's still quite a strong demand for that within the marketplace. But ultimately, I think that there will be a shift a little bit towards some residential development. While supply will come down, I do not think supply will completely dry up like it did in 2011 and 2012 when prices were at their lowest. A lot of small developers will have high borrowing costs on their schemes right now and will want to finish off their schemes and sell them as quickly as they possibly can. The first time buyers grant and a slowdown in supply will help prices of new homes stabilise a little bit and reduce any negative impact. However, I do think prices will still come down over the next year or so. Prices could come down anywhere between 5 or 10% or even more. While I've said that now is a good time to sell, and that view is shared by a lot of other agents as well, and if you are interested in selling in Dublin, please feel free to reach out. I also think now is a good time to buy if you can find a good deal. Myself and Christine feel that we've actually found a good deal. We went sale agreed on a property straight after lockdown, and we're almost ready to complete legals in the next few weeks. So I will keep you updated on that property once we're further along the lines. It's property in Portobello. It needs a lot of work, but I'm still fairly comfortable that we've got a good deal, and I will update you on that in future videos. So please make sure you subscribe if you want to see how that refurb goes. And also, as always, thanks for watching, and hope you found this video somewhat informative. But as always, don't forget to subscribe and like the video.